QuickBooks Pro Plus Desktop 2022 Bank Reconciliation Month Number 2 Deposits. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the view drop down, the open windows list on the left hand side, company drop down home page to the middle, maximizing within the gray area. Reports drop down, company and financial, looking at that balance sheet standard. Customizing the report with a range change from 010122. Let's bring it out to February 022822. That's the month that we will be reconciling in. Fonts and numbers, changing that font size, bringing it up to 14. Okay, yes please, and okay. We're focused now on the checking account, once again doing the bank reconciliation for the second month of operations this time. Noting that the second month should be easier given the fact that we don't have to deal with that beginning balance issue that we often run into with the first month bank reconciliation. This then should be more emblematic of the bank reconciliations that should be the norm after getting through that first one. So we're going to have our bank statement over here. So the bank statement has the beginning balance, noting that the beginning balance is going to be the same as the ending balance of the prior bank statement. That's why the bank statements are a good tool to use, as opposed to just trying to go into online banking and just looking at the running balance of transactions, because you want that nice cutoff date between one period to the next period to make sure that's really defined. The bank statements are, of course, a great tool for doing that. We've got the additions, we got the subtractions, we've got the balance at the end of the month here, and then we have the detail on the deposits and the checks. So we're going to be focusing this time on setting it up and entering the deposit side of things. So let's go back on over to QuickBooks to do that. We're going to go to the banking dropdown, getting into our bank reconciliation, go to the reconcile, and we've got our data input, familiar data input that we saw for the first month. We're reconciling the bank or the checking account. It's going to automatically, most likely, show the proper date now for this account because that's the last time we reconciled. The beginning balance should tie out now, as it does, as it should, for the rest of time as we do the bank reconciliations, if properly done, which is not too difficult to do. The ending balance is going to be the 101,590.05. 101,590.05 is the ending balance on the bank statement. And then I'm not going to put any service charges or interest, not because we don't have them, but because I think it's easier to actually do those as we do the bank reconciliation process. So I'm going to continue on. And once again, I think it's useful oftentimes to hide the transactions after the date you're working on, although we don't have any here because we're working we only went up through February, but I'll hit that just normally. I will use that. And then we have, just like we had last time, the deposits on the right, the checks on the left, noting the only thing that's a little bit different here, and the thing we need to get used to, is you're going to say, hey, wait a second, there's a couple items in here that were written in January, even though I'm reconciling February. What's going on? What in the world is going on? Well, those are the outstanding items for the January reconciliation. Those are the ones that we didn't check off in January. And if we were to look at the bank reconciliation report for January, those are the outstanding items. Those are the reconciling items. For example, if we went to the reports drop down and we then go down to the banking and I look at the previous reconciliation and look at the detail of it, which will open up hopefully in this PDF format without shutting down on me. So here we have our bank reconciliation. We have those uncleared transactions, the 6 checks you'll recall, stapled Verizon, 1008, 1010, the 1012, and so on. Those are going to be the items that are showing up here, which are going to hopefully clear in February, even though written in January. So we're going to be focused over here on the deposit side of things. I'm going to close up the caret on the left-hand side. Remember that down below, we got our beginning balance. These are going to be the items that we check off on the deposit side and the check side. You can see how that populates. And then on this side, we then have our ending balance and our cleared balance. Cleared balance then tying out to the beginning balance, and as we check off everything, we're going to be adding up or increasing the cleared balance, which is after we check everything off that will be tied out to the bank statement, will be equivalent to the 101,590 ending balance, and the difference being what is on our books to what is on the bank statement, will be the unchecked items that are still left unchecked, the outstanding items. Remember, we're comparing on our balance sheet here the 95,779.08 to what is on the bank statement, which is the 101,590.05. I'm going to close the reconciliation on this side. So there we have it. So now let's just check off these deposits. As we do so, we're always going from the deposit side of things to the books. Now you might go back and forth, but remember that you're thinking in your mind from the bank statement, I should say, the bank statement to the books, not from the books to the bank statement, because we expect everything on the bank statement to be on the books. And if they're not on the books, then we need to fix our books. Or if it's an error, we need to talk to the bank, but that's more unusual. If it's on the books, but not on the bank statement, we expect that to happen. So that's going to be something that actually happens. That's why it's easier to go from the statement to the books. So we're going to say, and the date is usually going to be pretty close with the deposits, and the amounts should tie out. You'll recall, if we have deposited our information in our books and the same grouping that we expect to see them on the bank statement, if we have to use undeposited funds in some way to group, say, check, credit card receipts or cash receipts, then we should do that. And if we do that, then this should be an easy process. So we're going to say 3472.50 is going to be tied out here on the bank reconciliation, closing the caret. And so there's the 3472.50, which was outstanding last month, but it cleared this month like we would expect it to do. So that is great. Let's go ahead and make that, color it yellow. And then we got the 12,250. The 12,250 here looks good. And then we've got, let's make that yellow. We've got the 4508 on 223. Notice over here it's on 220, so we put it in our system. This is our books, the bookkeeping. Earlier than it cleared the bank. Should take like 1 to 3 days to clear the bank, you would think, if it was a deposit. The 4508.70. So 4508.70. There we go. And then we've got the 750 next item, 750, and then finally the 400 right there. And we have completed the deposit side of things, coloring these off to end it out here. And then if I go back to my bank statement, then we don't have these two yet. That's not a problem for us. Notice that, again, everything on the bank statement is checked off on our books. Not everything on our books is checked off to the bank statement. That's what we expect to happen, most likely, because these two items we're thinking have then been deposited but have not yet cleared the bank. That would be the thought process. And then, of course, we can check to see if they cleared the bank by simply going to the bank, because we would be doing this bank reconciliation as of February 28th in sometime in March. So we have the capacity then to go to our bank statement, double check that these last two items have cleared. And we're not really doing this to see if those have cleared necessarily. We're trying to see exactly what the difference is between the books and the bank. And if we do that, it not only checks, those uncleared items, it also gives us that double verification that all the entries that we have put in to the system are valid, and not only on the cash side of things, but the fact that they should be going somewhere else as well, because it's a double entry accounting system into, say, the revenue cycle, the payable cycle, the employee cycle are valid as well, at least in the fact that they should exist in essence. So next time we're going to go back in and we're going to go to the check side of things and continue with the process. Remember that you can't just hit leave down here and you could go, eat lunch and whatnot, and then come back and it'll still be there waiting for you. You don't have to complete the bank reconciliation in one sitting.